Hey everyone, and welcome back to another video in our series analyzing top AIFs in India. In today's video, we'll be exploring the Renaissance India Next Fund. Renaissance, founded in 2016, is an equity-focused alternate investment firm led by a senior team with over 140 years of collective experience. The firm manages equity assets across PMS, AIF, advisory and offshore funds. You can check out our previous videos by clicking the info button, where we've covered AIF schemes from Abacus Asset Manager, Stallion Asset, Negan Capital, Buoyant, and many more. In this video, we'll break down everything you need to know, including the fund's basic details, investment strategy, portfolio mix, top holdings and sector exposures, insights about the fund manager, investment details like fees and exit load, returns generated, and tax implications on your earnings from the Renaissance India Next Fund. But before we begin, here is a quick word about us. We are PA Wealth, a full-spectrum investment firm offering expert guidance in PMS, mutual funds, AIFs, bonds, insurance, IPOs, startup investments and Dubai real estate. Subscribe to our channel and stay tuned for the latest market insights and wealth-building opportunities. Let's start with the basic details. The fund was launched on the 23rd of August 2023 and currently manages assets of 337 crore rupees. Its objective is to generate long-term capital growth by investing in India's key growth themes such as manufacturing, digital ecosystem, and technology adoption. The fund aims to deliver superior risk-adjusted returns through a high-growth multi-cap portfolio. Now let's move on to the investment strategy. The Renaissance India Next Fund follows the India Growth 2.0 strategy, a flexi-cap approach designed to generate sustainable high returns. The fund focuses on optimal portfolio construction, balancing risk and reward, with no sector bias, and aims to build a high-quality diversified portfolio of 25 to 30 carefully selected stocks. Next, let's look at the portfolio mix. The fund invests 51% in large-cap stocks, 24% in mid-cap stocks, and 26% in small-cap companies. Now, let's take a look at the top holdings. The top 5 stocks in the portfolio are HDFC Bank at 8.48%, 197 Communications at 6.96%, Tech Mahindra at 5.32%, Reliance Industries at 5.30%, and ICICI Bank at 5.02%. Moving on to sector exposures, the fund's largest allocations are to BFSI at 31.71%, Internet at 14.54%, Information Technology at 12.81%, Consumer Discretionary at 12.80%, and Pharma and Chemicals at 10.61%. Next, let's talk about the fund manager. The fund is managed by Mr. Pankaj Murarka, founder of Renaissance Investment Managers. Before establishing Renaissance in 2016, he served as CIO at Axis Mutual Fund, managing over $3 billion in Indian equities. He was awarded Best Fund Manager runner-up for Axis Mid-Cap Fund in 2014, and in 2015, Outlook Money recognized him as one of India's leading fund managers for consistent 5-year performance. Let's move on to the investment details. The fund requires a minimum investment of 1 crore rupees, has no exit load, and charges a fixed fee of 2.5% with no variable fees. Now, let's check the returns generated by the fund. Over the past 1 month, Renaissance India Next Fund delivered -2.92% compared to -1.38% for the NIFTY 50 TRI. Over 3 months, the fund returned -2.16%, while the NIFTY 50 TRI was at -1.31%. Over 6 months, the fund gained 12.79% against the NIFTY 50 TRI's 10.41%. Finally, over 1 year, the fund recorded -5.08% compared to -3.21% for the NIFTY 50 TRI. Finally, let's understand the tax implications. Unlike Category 1 and 2 AIFs, this fund does not have pass-through status, which means taxes are paid at the fund level and can fluctuate based on performance. That's all for today. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got an AIF or PMS scheme in mind that you want us to cover? Just let us know in the comments. Thank you for watching, and we'll see you in the next video.